Hi, everyone. My name is Patrick McCarthy, and I'm the Policy Advisor here at Veal Farmers of Ontario. Welcome to the first talk in VFO's new Managing Risk, Mastering Markets on-demand webinar series. This series is designed for grain-fed veal producers, offering expert insights and practical strategies to help them succeed in today's complex market. Joining us today are Ellen Blenkiron, Senior Industry Specialist at Agricorp, and her colleague, Research Analyst Jeff Janssen. Today, they are going to explain how Agricorp's suite of programs can help mitigate financial risks and stabilize farm income. Over to you, Ellen and Jeff.
Thank you very much. I appreciate the opportunity to speak today. And as mentioned, we are looking to present an update on the BRM programs that Agricorp delivers. Here's a quick overview of the agenda and some of the material we'd like to cover today. Primarily, we're going to focus on AgriStability, as well as do a deeper dive on the risk management program. And then finally, we'll talk about the AgriInvest program. This slide quickly illustrates the vast number of programs that Agricorp delivers. And again, as I mentioned, our focus today will be on AgriStability, RMP, as well as AgriInvest. Just really quickly wanted to touch on key pieces of some of these programming. And again, we'll get into more details as we progress. But AgriStability is in place to cover large income declines, and RMP is in place to deal with fluctuating costs and changing markets. Again, just a real quick snapshot of the different risks that the various programs cover. AgriStability, as you can see, is quite encompassing and covers a vast number of risks. And RMP, again, deals with increased costs and lower market prices. Wanted to remind folks of some of the key deadlines that are upcoming, and again, primarily focus on upcoming deadlines for AgriStability and RMP. So RMP for livestock 2025 deadline to apply or change coverage is May 1st. And for AgriStability, and again, that is to apply or pay your fee for the 2025 program year, the deadline is April 30th. Additionally, there are some other deadlines here that we'd ask you to pay attention to with respect to other programs and policies. Wanted to take a bit of a deeper dive now into AgriStability and talk about some of the mechanics. Again, as I mentioned, it is a whole farm disaster-based program that protects the net income of your whole farm. It's intended to cover crops, livestock, and byproducts. And again, as mentioned, covers large income declines covered by production loss, increased costs, or market conditions. Wanted to dive a bit deeper with respect to various aspects of AgriStability, and again, focus in on some of the key features. We talk about whole farm protection, as I mentioned earlier. The program does cover all aspects of the farm, so it does really provide that whole farm protection. It provides unique coverage in the sense of producers' reference margin is based on their individual and unique experience, and any changes they make on farm are based on their program response and performance to date. We often talk about the program being affordable, and again, I would certainly remind folks of that as well. On average, it works out to $315 per $100,000 of reference margin in order to participate in the program. So I would certainly encourage folks to give that some consideration if they are considering coverage. Talk about payments and times of financial distress. And again, we'll dive a bit deeper on this, but specifically there is one portion of the program that allows for payments to be made in a timely fashion, and that is an interim payment. So we'll circle back to that one in a few minutes. And then finally, we talk about access to credit options and programs, and specifically, as this group is likely familiar with, that is accessing ACC loans through APP, where AgriStability is a requirement in order to gain access to that. So again, some key aspects of the program in that sense. Just wanted to do a real quick plug here for our communications department and let folks know that we've done a bunch of video shorts over the last few weeks and months, and those videos are available on our website. And basically what they do is they help explain how the program works. And again, each video that we've prepared thus far focuses on one area or one element of the program. And again, some examples of that are focusing on allowable income and expenses and also on reference margins. So I certainly encourage folks to take a look at agricorp.com if they're interested. Just a real quick overview of AgriStability here. Again, some of the content we've covered on the left-hand side of the screen, but as I mentioned, again, it is intended for large income declines. We talked about interim payments. We'll talk about that as well in a few minutes. Talk about the cost again, low cost, so it's certainly not a barrier to entry. And then finally, again, the program has responded and proven to respond in challenging times historically. So certainly keep that in mind if you're looking at coverage for the 2025 program year. And then on the right-hand side of the screen, again, real simple illustration here of a payment, how a payment could work. And again, we'll get into some mechanics of this in the next few slides. One new option that I wanted to share with this group is a new way to participate in AgriStability in the 2025 program year, and that is the tax-aligned reference margin option. So in 2025, participants can choose this new option, and what that will do is it will match your method of accounting that you use for taxes in the sense of how we calculate the reference margin. AgriStability historically and traditionally is based on a modified accrual basis, but this new option will allow folks to have their reference margin calculated on a tax-aligned basis. And again, with the majority of participants being in AgriStability, filing on a cash basis of accounting would have that reference margin calculated on a cash margin. What this will do then is give better predictability of your AgriStability payment, because there is also a coverage option notice that allows folks to see what their support level is much earlier in the cycle. And then additionally, if producers aren't in a payment situation, they do not have to submit year-end paperwork at year-end. So less paperwork to do if they don't have a claim. Again, a bit of a recap here. With this option, again, Agricorp will send a coverage notice estimate in the fall. So approximately September or October of this year, if you're in that stream for 2025, you will receive this coverage notice estimate, and this coverage notice estimate will outline your reference margin as well as your estimated payment trigger. And again, just a reminder by way of comparison, traditionally participants in the program don't see this reference margin and payment trigger until much later when they submit their year-end claim paperwork and a decision is made on their application. So this gives folks better information much earlier in the cycle. And again, as I mentioned, at year end, you can consider how the year's income compares to your payment trigger, and again, decide whether or not you're going to be submitting any paperwork. So again, just a refresh of that option. Certainly remind folks of the ability to sign up for that stream. And again, the deadline to do so is April 30th, 2025. And there is a short selection form available on agricorp.com for folks that are interested. And again, if folks have any more questions, certainly give us a call before the deadline. Just wanted to give a real quick overview here of the 2025 AgriStability cycle. Again, we talked about the deadline to sign up, April 30th. From there, again, producer goes about their business, completes their fiscal year. Generally speaking, we talk about the cycle of AgriStability being about 18 months from top to bottom, which also includes filing income tax and submitting your year-end information if you are in that stream and in that scenario where you need to submit that. Talked about an interim payment as well. As I mentioned, we'll dive a bit deeper, but basically, if during your fiscal year you've had 6 months of production or more, you can then choose to apply for an interim payment. And again, referencing the traditional style, the traditional cycle for AgriStability, the deadline to submit forms is June 30th. And again, in this case, it's June 30th of 2026 for the 2025 program year. Interim payments. So yeah, I mentioned this earlier and just wanted to dive a bit deeper. So basically, an interim payment can provide farmer with cash flow when it's needed most. And again, that's well, an event is happening. So again, if a producer has at least 6 months of production in their fiscal year, they're eligible to apply. And again, it's based on their projected margin decline, based on the information that has happened thus far, as well as any projections for the balance of the year. Interim payments are traditionally made or issued at 50% of your estimated final payment. However, again, as this group may be aware, there are certainly situations historically where we've paid at a higher rate. And again, by way of example, in 2024, we had a 75% payment rate for producers in the nursery sector, as well as some beef producers. So starting at 50%, but certainly potential for that rate to move higher. And again, if folks are interested in an interim payment and want to know more, they can certainly take a look at the application on agricorp.com. Wanted to dive a little bit deeper into some of the mechanics of AgriStability and specifically talk about how the program works. And basically, there are two margins in place, one being the production margin, which is your net farming income in any given year. Primarily, it's referred to as your program year. And basically what this does is it reflects your allowable income minus your allowable expenses. And then from there, again, we have just a real simple illustration of how that could work. And again, what we see here, which we'll refer to later, is a production margin of $40,000. The other key margin in place for AgriStability is what we refer to as the reference margin. The reference margin is an average of production margins for the last 5 years. And in AgriStability, we use what we call an Olympic average, which is, again, using that 5-year average and then removing the highest and the lowest and averaging out the remaining 3. There are other options in place for producers that don't have as long a history. And again, if you've got less than 5 years, the program will use a 3-year average, which will then simply average the 3 most recent years. If a producer is new and they don't have any history to date, the program will construct a margin based on industry averages as well as the producer's intended production for that year. And then finally, again, just a real simple illustration of how that reference margin works in AgriStability using the series of figures down at the bottom of the slide here. So just to recap, again, we've got your production margin of $40,000 in 2024, and then your reference margin of $200,000. And again, a reminder of how that benchmark works to determine if you've got a production loss below that support level. So we'll move forward with that. So again, looking at the payment trigger, which is 70% of the reference margin, that gives us a payment trigger of $140,000. And again, with respect to the production margin of $40,000, we see the corresponding figures here. To add a bit more math to the equation here, we also talk about the compensation rate in AgriStability, which is paid at 80%. This has been in place for a number of years in Ontario. Ontario previously went on their own and had an 80% compensation rate effective for the 2020 program year. However, more recently, that 80% compensation rate was signed on nationally, so it is now issued at 80% compensation rate across the board, across the country. So the figures here we see on this slide, again, represent that 80% compensation rate. So again, we've got that $140,000 payment trigger. We've got the $40,000 production margin, and we multiply that figure by 80%, and that gives us an AgriStability payment of $80,000. I will pause quickly now and hand it over to Ellen for a quick update here on the risk management program.
Thanks, Jeff. So yeah, along with the AgriStability, we've got the risk management program for livestock, which is part of our business risk management suite of programs that you as veal producers may be interested in. So what is the risk management program? So it was designed in consultation with the industry. So Veal Farmers of Ontario was definitely involved and around the table when the risk management program was designed. It does work like insurance to help offset losses. It covers losses due to fluctuating costs and market prices. So there was the slide at the start there that sort of outlined all the different risks and which programs covered which ones. So the risk management program really is around those fluctuating costs and market prices. Premiums are based on insured production and chosen coverage levels. So we will talk a little bit more about that in a couple of slides around determining that insured production and choosing that coverage level. The RMP funds are held in a sector-specific fund, so that includes those. So the VEAL fund would include the annual Ontario government allocations as well as producer premiums. And those yearly funds that, if they're not used for payments during that year, they are rolled over to the future program years. So they are available in a time of need if the market prices are higher than support prices and there are no payments in a given year. Those funds do roll over and stay within that VEAL fund for producers in the future. So specifically when we talk about VEAL, so under the RMP for Livestock Plan, there is coverage for cattle, hogs, sheep, and veal. So today we'll talk mostly around eligibility and requirements for the VEAL plan specifically. So for veal, produced and owned by you in Ontario for a minimum of 90 consecutive calendar days, you have to enroll all your eligible production, provide a premise identification number as well as a farm business registration number. And for any of you who aren't familiar with those numbers or don't have those, definitely give us a call here at Agricorp. We can help you get those numbers if you're eligible or look into opportunities to apply for those and make sure you've got those to meet the eligibility requirements for RMP. Be able to demonstrate ownership of livestock. So again, these programs are really risk-based around those who have the production risks or the market risks. So we want to ensure that the right people are applying and have the ownership of those livestock. Eligible head must be sold for slaughter during the program year. So you'd be enrolling the number of head you thought you would be slaughtering in the 2025 calendar year. And then eligible head must be within the weight range of 600 to 769 pounds of live weight for the VEAL plan. So again, looking at the RMP for VEAL specific requirements, the first two, they're selecting coverage. So 80, 90, 95, or 100% coverage levels are available. The deadline to do that for the 2025 program year is May 1st of 2025. And then determining your insured production based on the number of head to be sold. Again, that'll be a May 1st deadline for 2025. So for producers who are already enrolled in the VEAL plan, you would have already received a renewal package. So if you're looking to change your coverage level or increase or decrease your insured production, you'd have to do that by May 1st. For any new applications, so someone who's watching this presentation and may be interested in enrolling for RMP for 2025, you also have until May 1st to get that application started with us. So you can give us a call here at Agricorp and we can help you with that insured production and getting the rest of the application information filled out. Once you're enrolled in the program and you've gone through that renewal or application cycle, the next thing as far as a requirement would be to pay premium. So the dates to pay the premium are July 31st of 2025 and January 31st of 2026. Again, you have the option to pay that premium once annually, or you can pay it semi-annually with the two dates of July 31st and January 31st. So you can choose what's best for you there. And then reporting sales. And on the next slide, we'll talk a little bit about the dates and the timelines to report those sales and how you can do that. So reporting sales, sales reports can be submitted online, mailed, or faxed in here to Agricorp. Pre-populated forms are also available, and that form can be downloaded and saved through our online services, and we will also mail you a copy that you can either submit by mail or fax to us, whichever is easier for you. And again, from a VEAL producer's perspective, you will submit sales each quarter. So typically that's April 30th, but for this year it's May 1st for 2025. July 31st, September 30th, and January 31st. So those will be the dates to submit your sales each quarter. If you don't have sales in a particular quarter, you are required to report 0 sales to us, and that can be either on a form or through a phone call directly into us. And then payments for the RMP for Livestock program, they are triggered when the average market price falls below your support level. Payments are made semi-annually for cow, calf, and sheep, but for the veal producers, beef cattle producers, and hog producers, those are made 3 times a year, so September, December, and March. The September payment will cover any sales for Q1 and Q2, so the first half of the year. Then there'll be an additional payment in December and then in March. And with the payments, we do use an interim rate. So we want to ensure that regardless of when you sell throughout the year, there is access obviously to the funds and everyone has the same access to those funds. So we start with an interim rate in September. If there's potential to move that interim rate up in Q3 or Q4, there would be adjustments to the previous quarters as well. And I will turn it back over to Jeff for AgriInvest.
Again, as mentioned, I wanted to do a brief update on AgriInvest. AgriInvest, while not delivered by Agricorp in Ontario, we do have a role, but the program itself is delivered by AFC for Ontario participants. So again, AgInvest, just real quick overview, wanted to provide a bit of an update. So essentially, AgriInvest is a savings account. I suspect most producers in this sector are enrolled and familiar with the program. I'd certainly encourage folks to take a look if they are not. Essentially, though, it's a savings account for producers supported by government, which provides flexible coverage for small income declines and allows producers to use those funds for investments or mitigate risk or make up for lost market income. Each year, a producer can deposit up to 100% of their allowable net sales into a bank account at a participating financial institution. From there, governments contribute 1% of allowable net sales as a matching contribution up to a maximum of $10,000 per year. Similar to what we talked about with some key deadlines for AgriStability and RMP, also wanted to remind producers of some key AgriInvest program deadlines. The first one being the September 30th, 2025 deadline, and that is the deadline to submit the 2024 AgriInvest application form, which is one of two forms for individuals. It's the T1163, and that form is submitted directly to CRA. And for corporations, trusts, and special individuals, that is the Statement A form, which is a form that essentially mimics the T1163. And that form is submitted and directly to Agricorp. Agricorp uses that information for AgriStability and RMP where applicable, and then also shares that information with the federal government for AgriInvest. If a producer misses that initial September 30th deadline, don't despair. There is a secondary deadline. However, note that there is a penalty associated with that. So there is an opportunity, but try to get it in by the initial deadline if possible. And then finally, the last deadline here for AgriInvest is a reminder for folks. Producers have 90 days to respond to their deposit notice that they receive from AFC to make a deposit into their account. Again, just a real quick reminder, some of the services and information that are available on agricorp.com. Encourage folks to take a look. And again, some of the information that we had referenced earlier is there as well. And again, so if producers have any questions, certainly take a look at agricorp.com. And then finally, if anyone has any questions, by all means, take a look again at our website. Feel free to contact us via email or call in and speak with a service representative. And with that, that concludes our presentation. I thank you for your time and wish everyone an excellent growing season. Thank you.
Thank you so much, Alan and Jeff, for that informative talk. Unpredictable markets, rising input costs, and production challenges can be tough for veal producers to manage, but having reliable programs available for them when they need it most can make the real difference. Also, for your information, Veal Farmers of Ontario has an Excel-based cost of production tool available to download on our website, vealfarmers.ca. This tool was created in partnership with the Ministry of Agriculture, Food and Agribusiness to help veal producers get a better handle on their costs, evaluate expansion and startup opportunities, and boost profitability. We encourage you to check it out as you put together your business mismanagement strategy. This concludes the first talk in the Managing Risk, Mastering Markets on-Demand webinar series. Thank you for watching, and be sure to visit our website, vealfarmers.ca/on-demand in the coming weeks for more new releases. Thanks very much.